You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and sometimes beyond and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the aforementioned network. If I sound a little bit different, if you hear a little bit of noise in the background, it's because we're not coming at you from our studio in Chicago. No, we're down the street here, still in Chicago. This time, though, we're at the trading show. So, yes, it's been a slew of conferences over the past couple of weeks, listeners. OIC, the Swan Conference, and now this one. So that's 3 in about a week. So luckily, I still have a voice because we have a lot of great guests lined up, including our next guest. He is a newcomer to the program and indeed to the network. He is Jason Victor, the CEO at RouteFire. Jason, welcome to the program.
Thank you so much for having me.
And Jason, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial space and what it is you guys do there at RouteFire.
Absolutely. I started computer programming when I was 6, so I've kind of loved technology my entire life, and when I graduated college, I sort of immediately gravitated to markets. I always was in love with markets, and at that point in time, high-frequency trading was becoming the next big thing, or rather had become the next big thing, and I got pretty heavily involved in high-frequency trading, specifically in the risk management side of things. And that's where I started my first company, actually, which was focused on managing risk in the context of high-frequency trading, and that actually dovetailed later on into building my current company, which creates connectivity layer and execution algorithms for the cryptocurrency markets.
Interesting. And a lot of people here are talking about different execution functionality when it comes to crypto. So that's, we've had a lot of guests over the last, I'd say, year to 18 months focusing on different elements of the crypto space. Executing on the algo side is not really one we've heard a lot. So I guess you get pride of place for that there, Jason. You're a first mover in there. Are you seeing a lot of demand from some of those traditional players in the algo space? Are they starting to move aggressively into crypto right now, or is it still maybe early days for that?
I would say there's sort of a natural tendency for quantitative traders to be attracted to crypto. Many of them have a sort of mathematical or scientific inclination, and that gets them interested in cryptography, and that gets them interested in cryptocurrencies. So we have been actually seeing quite a bit of overlap between the traditional quantitative market, hedge fund type of space and the newcomers into cryptocurrencies. However, where we tend to see the most flow is actually in funds that are fully dedicated to investing in cryptocurrencies, and probably that's been where we've had the most traction.
And I imagine a little bit of an uptick in that over the last month and a half as we've seen the worm turning a little bit in crypto, or has it kind of been staying the course out there?
Definitely a big uptick. A big uptick in activity, a big uptick in interest. I think there were probably people who were skeptical for some period of time, and when they saw the bullish price action, they got excited and they got back in. One of the things that I actually found interesting is crypto has become a lot less news and event driven than it once was. About a year ago, if any tiny thing happened, it would impact the market pretty substantially, and all sort of cryptocurrencies would move in tandem. These days we don't quite see that as much, and it almost feels like the traders are a bit more mature now, and they're used to the idea that news happens and that
the marketplace is growing up, if
exactly.
you will. It started off as a fledgling upstart, and now is actually big boys that come into play. But walk us through what it's been like over the last year or so out there doing this new startup, getting out there, getting new clients, new users, maybe raising money in an environment where let's say the trend was not your friend, where crypto every day was a new negative headline, breaking through a new low. It must have been a challenging 12 months.
Absolutely. I would say that we're very fortunate in that we met a lot of people along the way who had the benefit of a longer term kind of perspective. And they'd been through several market cycles, and they'd also seen the maturation process of other asset classes. Even if you just look back in the last 20 years, we've had Mike Milken and junk bonds, we've had structured products, we've had a whole lot of new asset classes come about, and there's quite often a period of maturation that sort of needs to take place. With us and fundraising, that wasn't so bad. There's actually quite a bit of interest and a lot of capital being allocated to the space. And
even at the height of the, shall we say, the naysaying, they were still interested. Okay.
Well, the reality is there's a lot of capital to allocate. Those allocations may have been made before those downward price movements even happened, and so it's there. It needs to be allocated to quality projects. And VCs in the Valley these days are enthusiastic to find equity deals they can invest in that are believably high quality.
And so you guys are pursuing the VC route then?
Yes, we did venture investing, and we raised a seed round last year, which we completed, and now we most likely are going to just drive straight through to the Series A, sometime probably early next year.
And we talked about some of the appetites in the marketplace. I'm curious, you're interacting with a higher end, the institutional side of the crypto space. I hear interesting, conflicting things about the interest level in that space. Obviously, it was super high in December of 2017, right, when it was pushing 20,000 and everyone and their mother wanted to get into crypto. Then when it got cut in half over the course of the next 6 to 10 months, I think some of that interest kind of ebbed a little bit. And now I think maybe we're seeing it pick up a little bit again, which is kind of interesting. Has that been your kind of your trajectory you've noticed as well? Or maybe did you behind the scenes, you mentioned the VCs never got tired of it. Did the institutions, were they still as excited about it, let's say, a year or 10 months ago when things were in the midst of the downturn?
I would say the institutions, and I mean this in no kind of bad way, tend to have a fairly short memory. What's happened recently impacts their decision-making a lot. VCs have a very long memory. They try to learn things typically based on looking at the last 50 years of technology and its development, and typically their theses come from that. And so when they look at a new space like crypto, certainly the fact that there are bits of stumbling on the way to greatness is nothing that concerns the venture capitalists. I would say certainly, though, with the institutional investors, we see the interest ebb and flow very much in tandem with the price action.
Morgan, right? JP Morgan, their CEO infamously called it a fraud, and then less than a year later they have their own product. So
yeah,
they've been known to change on a dime, or in the case, a token.
We certainly see a lot more on the family office side than on the hedge fund side. In terms of family offices just have a lot less rules around what they can do and less specific mandates. So they've probably been the most active in terms of institutionals.
So what is it that brings you to the trading show here in Chicago today? Is it just kind of getting the lay of the land, showing the flag? Do you have some announcements at the show? What brings, aside from talking to me, of course, what brings you out here today?
Well, delighted to be speaking with you, of course. And mainly we came out here with a couple partners of ours who we have common clients or we have common venture capitalists, and found out that a number of our close partners are going to be here, and we wanted to kind of come and represent together with the feeling that sort of the more that companies can link up and make friends with one another, to use that term very loosely, we think that that's going to be what creates the killer app in crypto. There's a lot of folks that are going around and they're proselytizing an idea of a complete end-to-end solution that starts with pre-trade analytics and ends all the way at settlement. And we don't really believe that's going to work. We think we need to find the right partners in order to build the end-to-end solution that people want. And so we're here to make those relationships.
The VC's playing a little matchmaker behind the scenes,
Absolutely.
You should meet this firm. I like that. That makes sense. That falls into their role. But you're right. We have seen some people, even today, have spoken to some firms that want to have that full soup to nuts solution. You're not a believer in that approach?
I'm not. I think that makes you a jack of all trades, master of none. Our idea at RouteFire is that we want to be amazing at what we do, and we want to really kill it. We want to be the best. We have numbers that we believe prove we're the best, and we really just want to focus on what we're doing and make sure that we stay the best and keep our first mover advantage nice and strong.
It's interesting. You're here obviously in Chicago, and you're based, I believe, in San Fran. Very cheap real estate out there in San
Yeah.
Fran, by the way. But yeah, it has been interesting to watch kind of the evolution of the crypto space to becoming this new mecca in the trading world, where there's so much infrastructure already in place here for trading options and futures, and
Absolutely.
so much of that has just migrated to the crypto world now. Has that been an interesting thing for you guys to watch? Kind of just the evolution. I mean, for me, it's fascinating to see just the mindsets. Like, you come from the Valley kind of mindset, so very much a technologically focused mindset, but there's also been this culture clash between let's say the crypto tech mindset and then the financial services mindset, who's a little bit, shall we say, a little bit more grounded, a little bit more regulatory friendly, and sometimes the two lift each other up, sometimes they clash. I'm curious for you, coming from maybe the other side of that, the Silicon Valley kind of side of that, what's it like for you kind of looking at and kind of breaking into these established, financial models, maybe welcoming, maybe not, even at a place here like Chicago?
It's very interesting. We've been finding that there's a lot of extremely well-established firms that are, planting their stake in crypto and deciding that they're going to get into the business. And a lot of them that have actually become some of the more important players in the space are here in Chicago. So it's interesting to me that these are the firms that really picked up the slack, and from the institutional side of things, that really made products that are now supporting the effort as a whole, supporting the crypto markets and enabling institutional investors that otherwise might not have access to get access to these marketplaces. And there's certainly been a lot of work that's gone on in terms of collaboration between the Midwest and the West Coast, and we've seen a lot of innovation centers and things like that in San Francisco that were obviously started by companies back east, but are looking to somehow involve themselves in the scene out there. So we're almost seeing the two mix a little bit from where I sit.
And obviously, we're a derivative-centric network, so we always tend to lead with that. That's a burgeoning area in the crypto space as well. We have listed futures. There are OTC options available. There are some options available not to a lot of U.S. residents, unfortunately, unless you VPN in. But there are options, quote unquote, available out there. I'm curious, is that an area of interest for you guys at all? Maybe growing as the crypto derivative side grows? Or are you still focused primarily on what's going on the spot side?
I would say derivatives is probably the most interesting potential avenue of improvement. Right now, we have a lot of customers that have a hedging need. That's the main thing that they're doing. They have an exposure, and they need to get rid of that exposure. And there's a lot of cases in which it would really help to just have some derivative instruments to use to put together the correct exposure profile for them. The problem is there's a lot of difficulty with options in crypto because of both the regulatory issue. And there's the liquidity issue, and then there's just a certain kind of operational issue where we've found that the folks that are able to write these over-the-counter derivatives have a lot of trouble delta hedging them efficiently enough that they can turn a profit. And so if they can't hedge it efficiently enough to turn a profit, they're not going to keep writing those options. And that's what I worry is happening to some firms right now.
Or it'll be so wide that it won't even be useful for your client, right? Because the market can only reflect what they can hedge, right?
Exactly.
And so,
Exactly.
That is an interesting area. You're right, as we have seen, because we have talked to some of the OTC firms here and others on the show. And you're right, it still is a challenge as they're out there sourcing liquidity in the underlying and of course in the options as well. It is interesting. It is a challenge nonetheless. But just judging from the conversations I've had here on the air and off, there seems to be some interesting efforts going on.
Especially in futures.
Yes,
Futures really big.
We saw Kraken listing them now. CME obviously had them.
Absolutely.
CBOE, of course, getting out of that fray a little bit. But I don't think we've heard the last of the CBOE in the crypto derivative space either. Maybe just taking a little bit of a break. So a lot of interesting things at that. Speaking of interesting things, Jason, we like to leave our audience with leave them wanting more. Leave them with a little bit of a hint, a little bit of a tease of what they can expect from you guys in the coming months. If you got something up your sleeves you want to share with us, sir, now is the time. The floor is yours. Threw you a curveball there.
In the next few months, I think that our focus is going to be on expanding into the mid-market. Right now, our product has mainly been developed for and distributed to particularly large firms. And we've targeted particularly large firms because with a product whose purpose is to mitigate market impact, the greater the size of the trade, the more the value of the product, the greater the value of the product. And one of the things that we realized recently when market testing our product is that actually that value is enormous even at the mid-market. Not only in terms of the quantitative discussion of how much market impact will you have for different size trades. Certainly, there's money to be made there. But much more interesting is that we found there's a lot of value in just the consolidation of the liquidity itself. So what we're planning to do is to create a product that allows you to send crypto to a particular address and have it, using RouteFire algorithms, automatically convert into some other crypto or fiat currency of your choice. And that's going to be our big change, is that we'd like to move from a fully non-custodial model like we have now, where we never touch any coins, to a model where we actually do temporarily take custody of coins so as to facilitate the trade for the customer without complexity.
Yeah, it does seem like everyone I talk to, the custody is still the bugbear of the space. Who's going to deal with it? Where you custody with? So if you guys, most of the people I talk to are no, we're not going to touch that. So the fact that you guys are willing to dive into that fray, dive into that fire to keep with your name and branding there, that's an interesting one. I'm looking forward to seeing that, Jason.
Thank you. We're excited to deploy it.
And look forward to seeing how all this, the custody and everything else, unfolds in the marketplace in the coming months. Thanks for coming on.
Very cool. Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.